Okay, cool. So everybody, my name is Mark Nicholas. I'm the founder of the Day Trading Zones. Day Trading Zones is a research and analysis firm that we do for the hedge fund industry. I started with the institutional side. I worked as a prop trader and as an hedge fund trader for a company called JP Capital. I used to trade options, futures, and NASDAQ stocks. I moved gradually in doing my decision tools and softwares with buy zones, sell zones, caution zones for the market. One of the particular thing that we do is that we trade real money. We trade real money every day. We have developed our research analysis processes and tools around real money. As you can see right now, this is one of my 6 accounts. Today, live, can everybody see this? Just a quick yes, no, that'd be appreciated. And so you can see some
Mark,
of
I will let you know that I'm in, okay?
Okay, thanks. And this is, by the way, everyone, Kevin Stewart, my co-head trader, everyone. So.
Hi, welcome everybody. Thanks for being here today.
Okay, so here's what happened. We trade options. We're big believers in options in the options market. I've traded over the past 22 years, everything under the sun. I traded futures, traded Forex. And one of the most powerful instruments that you will be able to use in your lifetime is options. For instance, let me show you. This is real money for people who know TOS and TD Ameritrade. Again, this is just one of my 6 accounts. It's a small account. This here is a real account. This is not the paper trading from TOS. This is real money. And again, in this industry, it's important that you see that the people who are trying to help you are people that put their money where their mouth is, aka trading real money, right? So, for instance, on SPY, you can see that I have a couple of trades open where I have a trade that I opened 2-3 days ago before the drop, which I bought for $4 on a 2095 puts, and it's over a double. And the reason I'm showing you this is because the option industry is the only place, if done properly, where you can create 2 things: income, so weekly income and monthly income, with 68 to 95% chance of success, which we call it the safer income strategies. And then you can also play what we call the account growth, trying to go with small amounts of money, going for the doubles like this. See, I invested $400 in this trade, right? $400, and that $400 is 1,064 right now. So I think that it's fair to assume that everybody in this room has $400 to invest, right? And also, we are big fans of doing 2-legged trade. You know, you buy a long and you sell a short. This is for cost reduction. It's called a debit spread. So the reason I like those, and I'll show you around the tools, how we timed this properly, okay, although we might get a little rebound now. What the reason and I like also, and I'll explain that on Tuesday, we have an event Tuesday night at 8 p.m. for the entire community on our latest tricks for consistent income. It will be Tuesday night, 8 p.m., available for everybody. It is very important for me to manage my deltas and my theta before the market close. See, like for instance, I have a lot of theta negative if the market rebound, and this might be a problem. I have also negative theta. So I like to finish the day usually at delta neutral and theta neutral to positive theta. But also I know that when the market drops like this, I know that the implied volatility in the market, for people who knows implied volatility in options, increase. So the market drops, right? The implied volatility in the market increases, then the place where you make the most money are going to be options and straight puts or debit spreads like this. This is why we've made a nice profit here for the next few days. And you can see, if I go to my trade tab and put my SPY here, okay, I tap SPY, and I'll show you where in 42 days that 209 puts has been taken, and you will see that we took that trade on the chart on 8/18. 8/18, 3 days ago, before the big drop. We are 8/21 at 1 o'clock. See, it's in black and white. You have the entry, you have the time, everything. So if you go back in my full Pro Tool charts, 8:18, and you are looking, okay, where is that dude took his trade? And you look at 8:18, 1 o'clock in the afternoon, you are like, geez, this guy took this thing right there at 2,094 in the market, right? And the reason I took it around here is because we had already a shift, a cross, recross, and a retest lower high, right, in the market. That was extremely important, right? Cross, recross, retest lower high of our most important resistance, which are those red dashes. They are red for a reason. They are the most important ones. And then we had a trade continuation, as you can see, of a down arrow, mean immediate trend shift to the downside at about 2092, right there, right? And then you have a continuation of those pink dot for a 70% move on the downside. And that type of knowledge, okay, that type of knowledge that we provide to the institutions and to others, we condense those 27 zones and that knowledge for the retail public into a buy zone, sell zone, caution zone to give you a map. And these are the technique, and we are going to go over that have helped me to do some of those trades. And it's not just one double, it's many doubles. Because in this business, you are going to make money by being patient, keeping runners. Does that make sense, everybody? You are not going to make money by getting in and out, in and out, in and out all the time. You will have to keep runners, because those runners is what is going to create wealth and income. And be patient and understand those reference points where you have high probability of success. So another double, you look at Amazon, it's almost a triple, you know. I bought a 515 put, and as a matter of fact, I'll show you on Tuesday at the Tuesday event, this was a credit spread. It was a put credit spread 520, so I was short the 520 put and long the 515 put, and I cover the 520 as I saw the market was going to roll over, and then we let the long leg play itself. It's called a back ratio for almost a triple here, at least 2.5 times your money. So these are very, very important, very, very important processes. So again, what we do is we take for the retail public those 28 zone and decision tools that works for all markets, right? I have also a secret weapon called the volume indicator. So let me show you. That's a volume indicator. It's called a net buyer, net seller, okay, tool, where I can see pretty much if there is fuel into the move that I'm trying to assess at the resistance. So if I come here and we look for the past few days, right? What I want to see, and I'll put a 60-minute chart so that you understand, the net buyer, net sellers, and then we're going to show you tricks that everybody can do with their own charts. So here is a very important divergence for us to make money, and that we help institution pinpoint, is then when we see those lower high on net buyer, net seller, and higher low in price, what does that mean? What is that called, everybody? Higher lows in price on the 1718, which is the place where I have been able to double some of those trades. And the net buyer, net sellers are going lower high, meaning that the fuel is showing us that as we make new highs here, right, Kevin? There's no fuel to support that new high, right? So when I go on the
and Jay's got it right, divergence, right? Divergence.
Right. And then when we go here and take all those trades on the 18 before everybody, because the key of success in this business is not that you come today and chase the rebound or chase the shorts here. The key in this success is to know where the puck is, right, to where the puck is going. It's a very, very important concept. So what we do for the retail public is we use the full product tool and that knowledge, synthesize those 27 zones into 8 to 7, 10 zones that are very clear, like on Thinkorswim. You can incorporate that at no extra cost, right? And what we do is we create for the 10 hottest money instruments, what we call the buy zone, the sell zone, the caution zone, for you to drive, okay, a game plan for the day. So look, if you look at the SPX, can everybody see the SPX right now? You can see that we had a shift from the buy zone, cross retest lower high, all the way to the bottom of the caution zone on SPX, and they are trying to hold that bottom of the caution zone for a rebound, probably at the 2025, 2040 is going to be the most important resistance points on ES coming into next week. And so this is key that you learn a lot. Again, my name for everybody is Mark Nicholas. I am the founder and head traders of Day Trading Zones. Kevin, Mark Nicol, that's my girlfriend. Mark Nicholas, and Kevin Stewart is my co-head trader. So again, we wanted to show you stuff. We do stuff in real money, and we're going to share with you some concepts that are going to help you in your trading that we feel can help you tremendously. Can everybody see the slideshow now? Okay, and then we'll come back with real trading and real examples of money that we do. Okay, so again, we want to help you understanding what random profit is versus consistent income, because everybody in this business can have a great day, right? But only 10% of the people in this business to 15% of the people, okay, take all the money from the other 85% by being consistent. Okay, and Kevin and I both have hedge fund background. We both are traders that trades every day, and we are really passionate and compassionate about a trader's journey in this business. It is very important. Like I told you, we are people that trades real money all the time. Like I showed you today, we're at about $8,500. It goes up, it goes down. I have longs at 56 days. Of course, now I am teaching you guys, so you might have to, like, if there's a rebound happening here, I might have to put maybe a long ES to offset my delta or offset a big thing. But nonetheless, I want you to see that this is the type of stuff we do, and we anticipate before it happens the moves. Like I showed you, this SPY, which is bought at $4, that is $10. We did that on August 18th. So Kevin and I want to share what took us many, many years and a lot of blood and tears to really grasp, right? And one of the things that you want to grasp is that you want to take this as a business, right? This is a business. This is a place where you want to understand your expenses, commissions, chart fees, education. You want to understand also the impact of taxes into your business to have a productive business that will last for a long time and not be part of the statistics of the traders that lose money consistently. Okay? Now, we are one of the few in this industry that shows year-to-date P&L. So this is an account where we did an experiment jointly, Kevin and I. We started with about less than $8,000, I believe. We brought the account to a level of net liquidation value of $23,000. Our year-to-date P&L was 15. And we are also one of the few in the industry, not only showing our year-to-date P&L from that experiment and our trades that we do with real money, but we are one of the few in this industry that shows what was our commission impact on the bottom line. Does that make sense, everybody? Because a lot of people, well, number one, most of the people do not show you yearly P&L. But the few that shows you yearly P&L, it would be helpful that you see how much commissions they've spent for the year, because if someone tells you, oh, I made $120,000 gross here, well, on TOS, unfortunately, those are not net results. How much have you spent in commission? Because if you've lost $122,000 in commissions, as a matter of fact, you have not done any money. So those are little tricks that you need to be aware where yearly P&Ls is being demonstrated to you guys, okay? It's very, very important. This is my P&L from yesterday. as you can see, so there's the date, right? And I'll show you the P&L of today. So this is yesterday, how we played that drop. This was $5,606 open with $3,600 open on P&L for the day. And today, the P&L is $3,766 with a $8,881 P&L open today, live, streaming in front of you. This is a real account for the people who came late. Think or swim would say here, brown paper trading, and this is the real thing, right? So also, what you have to understand is that the concept we are going to share with you today, most importantly, is not just me and Kevin who have done that 20 years. It's kind of easy or easier for someone who has done it 20 years to show results. But the most important thing, in my opinion, is can those things be helpful and replicable for others, right? And this is, and I want to make sure I have full disclosure here, this is our best traders in our community. Her name is Penny Creel. She's a real person. I'll show you our Mastery Facebook group. Penny has joined our Mastery at the beginning of January. Penny has not done any real money trade for 4 months. 4 months, she prepared. You know, she did sim trade. She prepared very, very, very cautiously. This is her interactive broker account asset, net asset allocation. She has turned everybody a $37,000 account into a $112,000 account, which is mind-boggling. Mind-boggling, 217%. She is our super trader. It's not typical of everybody in the community, but it's interesting to understand that Penny, when she came to us, didn't know how to do a credit spread, didn't know how to defend, right, Kevin, a debit spread and do the back ratio for defense. She didn't know how to do iron condors. She didn't know how to do iron butterflies, right? And all of these are positive theta plays that are income plays that you are making regular money. Another thing that you need to understand in this industry, it's not knowing all the option strategies, but understand the very few option strategies. Okay, I repeat, right, Kevin? Understand the very few option strategies that are going to make you money. And I think it's critical, everybody, that you understand that. You don't need to be an option expert to replicate the same option strategies that Penny was a 217% return on her money for the year so far. That is our best student. Go ahead, Kevin.
And look at that. I mean, she took the time and did her due diligence for 3 or 4 months and paper traded until she had the 2 strategies, basically, is what she was using, until she had those strategies wired, until she really understood them backwards and forward and knew what to expect. And then the confidence came. She started trading real money with small size, and then she just scaled up as she had some successes there. And you could see, you know, every time there was a bull flag here, she broke out to new levels. Every time there was a double top, she broke out to new levels. So that was her system working for her. So, you know, that's what we hope that you folks will create, is your own system from what we teach.
Okay. And so one important concept in everything that we do, it's called distribution of statistics and distribution of past and present and future price behavior. Our entire goal in our day trading zones community research analysis that we do for institutions and for the retail side is all based about that trade that I showed you that is almost a triple and a double, where, okay, at 2094, we saw something within the processes, the reference points that we use to take shorts to bring them all the way down today, right? So again, if you look at those trade live right now, right? This is my real account, one of my 6 real accounts. If you look at this trade on the SPY one more time, it is a trade that I took at $4 on the 18 at 1 o'clock, and it's 1066, right? Those are reference points with 42 days to go, 56 6 days to go to the debit spread, which I took yesterday, 239, 324, and this trade, which I bought for 785 yesterday, which is 1143. So you can see the progression, no BS progression here of those trades by looking at the point of entry. I click here, it gives you entry. I enter again at 8:18 at 1 o'clock. So you can see that I took it just before the drop when the ES was at a 2094. So we have processes and buy zone, sell zone, caution zone, and support and resistance that help us. Then you see the other trades from yesterday, right, that are running here for the day. So yes, the P&L will fluctuate, but the point of the matter is I booked $5,000 yesterday. I booked already $3,900 for today, and there's $9,000 running, right? And this is one of my smallest accounts, as a matter of fact, right? And what's important for the people who have smaller account is to understand the rate of return. What is this guy's rate of return? $400 to $1,074 on one contract. What is this guy's rate of return when you look at his Amazon put here? $9.93 to $25. The guy has almost triple. The guy has almost triple is a trade on this one. Okay, so this is the growth trade. Then when you see trades like this, which are credit spread, you see income trade. I saw this one for 35, for 30 before the earnings. For 116, it's worth zero. Other earning trades that I've anticipated very well was the short on Apple, which I had a short 126, 127 that expires today, which I sold for 27 cents, which is worth nothing. It's worthless, right? And then I got caught into a put where I started losing money, and then I'm starting to adjust into a back ratio where, guess what? A loser becomes a profitable trade now. Very powerful. A loser becomes a profitable trade on small sizes. And this is the type of trick that we are going to teach you when you join our community, and we will have a free event on Tuesday for the people who want to dig into the consistent processes and consistent income, the latest stuff that we are really using in this market conditions, right? So those are important stuff. Now, Kevin is going to explain to you how this took us years to really grasp and combine two things. This is the option model of the statistics, right? So if you are between one standard deviation, you have 68% chance of making money. So you have a reference point here and a reference point in here in which you are going to make money 68% of the time. If you got two standard deviation, you are going to go into a point where you make 95% of the time the money. And then three standard deviation is like 99% of the time. And this is set by the option strategy, but here's the problem. If you look on August 18, when the price of the ES was 2094, and you look at those option statistics, they will have showed you that the SPX had maybe 70 to 84% chance of staying, right, Kevin, above the 2050, right? But we at the day trading zones, by using the same processes as the distribution curve, see our buy zone here, we look for sell. Our caution zone, we look for doing nothing or be out of the money on each extreme. The sell zone, we are looking to buy or a rebound, of cautious of a rebound. It's the same process as having a bell curve like this, right? Where you have more probability of success on the edges of the bell curve here, right?
Yeah, so we're trading from the edges there, you know, for good risk management, right? Good risk management involves good trade location, and what this day trading zone levels do is gives you really good trade location, right? Reduce your risk by getting in the correct spot. When everybody else is selling and thinking the sky's falling, we're getting a long initial position put on.
Right. And it's very, very profound because we use a different model than the option strategies. And the reason we do that is because option strategies 2 days ago would have given you 84% chance of staying to above 294. So they are BS. It's bullshit, right? But prior 6 months, 9 months price behavior and down arrow dots that I showed you are more accurate than this. So I'm using this, okay, plus this, but I always make my decision on the price behaviors, the buy zone, sell zones, caution zones for everything that I do. And that's why I have taken those trades a couple of days ago. It's distribution, it's based essentially when you look at the full pro tool, right? And I can show you here the behavior of the market since 8/18, right? We are going, I call that a shift of momentum, right? We go from up arrow, blue dot, to the cross recross that starts creating an entire up and down around the most important zone here and here. It marks a down arrow with lower high with a 70% of a continuation, just ping that. So I know not to get long. You know, a lot of people, it drops here, they want to get long. It rebounds here, it drops again here, they want to get long. And each time you get long, you get destroyed because the trend has shifted to the downside. So we take those 27 zones, we take those immediate trend tools and those continuation tools. We also use the MACDs. Those MACDs are very helpful as well. The 619.9, which is the fast MACD, or the 1226.9 for everyone. And you see, if you look at the MACD and you kind of respect the power of the MACD, people say MACDs are BS and they are lagging. Well, if you look at the price like the net buyer, net seller a secret tool that I have, you could see that as the market makes new high here, the MACDs start making lower high, guys, right? And it is a big divergence here and here. And also I had confirmation with the fuel of the net buyer, net seller. And so those type of things are important for you to understand that the way you are going to be successful in this business is by trading in the fringes. Meaning what? That you want, for instance, if you take a credit spread, you always need to be successful in credit spread. You need two things. Where is going to be my short strike if I am going to take a cold credit spread? And where is my short strike if I'm going to take a long, right? And if you don't know those two reference points, you are not going to make money. Although it's a strategy that makes money 70% of the time, whether the market goes up, whether the market goes sideways, and whether the market goes down. And again, if you are new to options or you are new to credit spread or adjusting, defending, doing iron condors, iron butterflies, do not be afraid because it's not that complicated. It takes a little time, but it's not that complicated. You just need to be engaged with the few guys in the industry that you like, you appreciate, people who trade real money like we do, people who show P&L results for small accounts like you have, right? And be engaged, you know, keep on coming and be engaged. And so like I told you, we're looking forward to seeing you at this 8 p.m. on Tuesday event, which is our first public event since July the 7th, 2000, so almost 2 months, right? And so up, down, or sideways, you are making money. But the key is where's the reference point to make that short strike on your credit spread. And that's where the day trading zones become extremely helpful when you go to charts here. And we have our buy zone, sell zone, caution zones for our 10 hardest instruments that embed for free. You don't have extra cost with Ninja, Thinkorswim, and eSignal. And see, and all you have to do is, okay, we're going from the buy zone. We have shifted by cross, recross, retest, lower high, and we are going. And we are holding here the bottom of the caution zone on the SPX. So you, as a trader, want to avoid to trade that crap on the caution zones when they are tight or when you miss the move. You want to be placing bets on the fringes to have trades that are 68 to 95% chance of success. Right, Kevin? This is critical, guys, that you understand that because it took me many years trading at the current price at 50% chance of success before I really got into the income trading.
Mark, go back to that price chart that you just had open there, if you would. And there's two things that I wanted to share, just two concepts, okay? One of them is look at that MACD. Look at that MACD, and you see the divergence up at the high there. and the MACD was rolling over before price rolled over. And so you'll hear me teach that, and you'll hear us explain that to students, that momentum precedes price, okay? You can see a shift in momentum before you can see the change in the price, okay? So that's first thing. The second thing that Mark said was, hey, you know, the reason that we make the caution zone yellow, right, is because caution, directional traders are going to get mincemeat here. They're going to get chopped up, okay? And what we do is we put that initial trade on, right? That's a high probability trade where we're selling premium, all right? So we give ourselves an edge at the highs there. We're selling call credit spreads, right? So we've given ourselves the edge. Once we get a lower high put in and we're confident that, hey, this is a short, then you can get some directional edge, right? Either some directional puts, right, or some put debit spreads, right? And the beautiful thing about these charts is the targets are easy. I just look at it in 2 seconds. I know that the bottom of my caution zone, 2003, right? If I got in at 2050, guess what? My preliminary target's 2025. My secondary target's 2003. If it undercuts that level, hey, awesome, right? I've got some runners there. And so, you know, that's just one chart at a glance, right? That we can see, boom, boom. We can see strategies. We can see risk management. We can see shift of momentum. That's just on one chart, okay? Thanks, Mark. Okay, good deal. So anyway, so that is the you know, those are the things that we're looking for on this chart. Okay, so I just wanted to share those couple of things with you. Mark, you there, buddy?
Okay, guys. Yes, apparently, apparently someone was putting me on mute.
No,
So,
no worries.
sorry.
You got it.
Okay, so let's continue with some of the key principles that I think will help you. And like I said, we've showed you our best traders in our community. As a matter of fact, let me show you in our mastery program, we have a true community, a true brainstorm. We are a close-knit of over 300 traders. See, this is our private mastery program. And the traders interact and share trades all the time. See, share trades, like, let me get this pen out so you can see. So the community, see, people, that those are real people, real picture. And I want to show you that the person that I showed you earlier is real, like Penny Creel with a 200% return on a real interactive broker for the year, is a real lady. I mean, Penny Creel, see, I make a search, she is here, right? And she interacts with our community all the time. See, this is a post that she posts, and everybody talk with her because she's our superstar, you know, someone that did not know anything about credit spread, eye on Condor, defending, and she's learned to do trades like I have right now in my live account, you know, where I have $9,329 open with that drop for the past 2 days, taking trades that over double. She has been able to understand, replicate, and apply those processes, because the only businesses that are successful in life are businesses that have replicable and consistent processes. Do you guys understand, everybody? This is very, very important that you understand. Tiens, look at the comment from Scott. Thanks. In your control panel, he is one of our students. But anyway, it is very important that you understand that successful businesses have consistent and replicable processes. I don't know about you, but I don't know any businesses in this planet that are successful if they don't have consistent and replicable processes. McDonald's, for instance, is one of my preferred business case study, because it is a business where you can take someone who has very little education and a burning desire to succeed, right? So very little education, right, Kevin? And a burning desire to succeed. And if he goes through the McDonald's franchise process that have consistent and replicable step, that kid within 2-3 months can manage over $1 million or $5 or $10 million McDonald's franchise. And this is very powerful, because any way you look at it, any businesses that is successful have consistent, I repeat, and replicable processes. And your trading business is no different than that, no different than a business. So to make it successful, and especially in our community, we don't want you to know all those option strategies BS there, right? It's not because you don't know what a Christmas tree butterfly is that you are not going to make money. As a matter of fact, in our community, we focused in no more than 6 option strategies around our support and resistance and trend tools, right? To overlay the right reference points to do your credit spreads and your short strikes, right? We have 6 option strategies, and we also know as a second nature to defend those 6 option strategies. So again, you don't need to be the jack of all trades. You need to master few, and you need to master few that makes money on a consistent and regular basis, everyone. Yeah. So what are those strategies? Go ahead, Kevin.
To make adjustments too. You know, that's the other thing, is to be mentally flexible and to understand your strategies and be able to make adjustments. You know, these aren't cowboy trades, right? We're not shooting from the hip. We have support resistance levels. We're able to anticipate what trade we're going to take at what location. We're all ready to go. If it doesn't work out, no problem. We'll just do an adjustment. We'll do a back ratio adjustment.
Exactly. And so what we are going to talk about Tuesday is review some of the tweak that we do. We believe very much in naked puts, but the problem is the only people who can do naked puts, not calls. We don't like naked calls, because we don't mind naked puts, because worst case we are being given the stock at a discount. But the only people who can really do naked puts are people who have portfolio margin account. Portfolio margin account usually is for the retail trader that has more capital, which is usually $100,000. To give you an idea, at Interactive Broker, they give you more buying power, or $125,000 at toss, right? But 80% to 90% of the people in this room will not be able to do that. So then your next best bet is a credit spread that has a 70% probability of success. An iron condor has 65% probability of success. A diagonal has a 55-60% chance of success. A debit spread has a 50-55. A put and calls are a toss, a gamble. But they are not so much a gamble when you know your reference points to make money. If I know my reference point of support and resistance to make money, look, the P&L is going up since we talk here, right? You know to buy on the 18, that $4 becomes 11. Now this trade, ladies and gentlemen, is about to become a triple, right? Just in front of you, right? And this is very powerful. It's all about knowing where the puck is to where the puck is going to be, like Grant Wetsky says all the time, right? And I'll share that with you. But look, again, you see the entries of those trades, 8:18, 1 o'clock, $4, it's 11, it's almost a triple. You look now, the Amazon trade, same idea. I bought it for $9.93, it's 26, almost a triple. Yeah? So this shows you, and the reason why I don't mind having straight put is that if you are an astute option trader, you would know, again, I repeat, when the market drops, what happened to the implied volatility of the entire market? What happened to your VIX? When the market drops, the implied volatility of an option, remember in an option there's three components. There's real value, time value in an option, and there's implied volatility. So if there's a $1 option, you need to be careful because the real value might be only 20 cents. The time value might be 50 cents, and then 30 cents in implied volatility. If you don't know that, then you don't know options. Because options, if you don't master those three components, real value, time value, implied volatility in an option, whether you buy or sell options, you are never going to make consistent money in this business, never. So when the market drops, the implied volatility jumps. When the implied volatility jumps, does that increase or decrease my option prices on a naked put? That exploded to a triple. That pushes this entire pump into the options. Right, Kevin? It's very, very profound, guys.
Yeah, you got a downtrending market, you're going to get much more premium on a downtrending market when volatility rises. We want to time that. We want to time it well.
Because what happened is, what is, for people who are new to options in this room, what is implied volatility? I had many years ago, one guy that used to trade with me, JP Capital in my hedge fund, he says, volatility, write that down, it can help you going forward in your trading career. Volatility is nothing less than a fear factor. Does that make sense? Repeat again. Volatility is nothing more than a fear factor, right? So the fear factor, right? The fear factor has increased in the market, and I saw that fear factor coming 2 days ago in most of my portfolio, which allows me to take advantage in that jump of triples in my portfolio. And notice I have a lot of days left, 28 days left, 42 days left, 56. I don't gamble on the weeklies this week, right? Not to say that it was not a good thing today, buying 40 cents options that maybe became a double, but I play this a little safer. I go 56 days, 42 days, and I'm still making a triple, right? And this is very powerful. Michael, the calls that you see were position I took this morning, I was trying to offset my delta, but that's a discussion for Tuesday night. When you trade, $10,000 now. When you trade, you need to do and manage something called your deltas and your thetas. So at all time, I watch my total numbers on my deltas and my theta, and I'll explain on the Tuesday night event how do I manage that in an astute way so that I don't overexpose myself overnight from one day to the next, okay? I'll explain that on Tuesday. So Kevin is going to explain to you one of our favorite trading strategy. Would you like to learn that, guys? Would that be something that you would like to learn? One of our best trading strategy that can help you. It's called the 1, 2, 3 punch. Would that be something that everybody would like to learn? Instead of showing results, yearly results, student results, and our results. What about teaching you one thing that we feel is very important? Okay.
This is, and yeah, show them the legal pad here, because this is kind of ingrained in our minds. This we call this the 1, 2, 3 punch. And I intimated earlier about this, and as price is coming down and we're anticipating some support here, price, if you've been trading for any length of time, you'll know that price on the downside comes so much faster and farther than price on the upside. And so, typically what happens is we'll have defined support, and price will crash through that support and then find it does an undercut of the support. And then, so as price is coming and undercuts the support, then, and I already intimated this earlier in my discussion when we were talking earlier, was that, put credit spreads is what we want to go to, right? That's our first punch, right? Our go-to trade is these put credit spreads. We've got volatility that's pumped up as price is falling, so we get really nice credits. We can either go at the money or out of the money. For beginners, we teach out of the money, right? Because it's safer. There's a higher margin of safety. There's a higher probability of success. We're getting plenty of premium as price comes down. And put credit spreads, right? So, and then as price pops up and retests, right, what was support before now becomes resistance, right? So as price pops up over the resistance and then comes back and retests this and make a higher low, right? Support is held, right? Then we know, oh, we're correct in our assumption that price is going to go up from here, and then we can get a little bit more edge on the knife, right? We can get a little bit more edge on the sword. We can get some directional calls, or better yet, let's get a call debit spread, right? Because it's got a much higher probability. And so we get that call debit spread on, right? And so that's at this S1 level. With a debit spread, you're always selling the target, right? So we would sell R1 and we would buy S1, right? So on a spread, on a debit spread, right? So you're not just collecting put premium down here at the lows, right? And you've already made money on it when price makes a higher low. But now you've got the second punch involved, which is that call debit spread. You've sold the support, you've bought the support, you've sold the resistance, okay? And then you've got what I like to call a campaign, right? You're marching from point 2 to point 3, okay? So, or from S1 up to R1. And once you get up to R1, then you can convert that call debit spread, right? You can convert that call debit spread, and you can start to leg into a call credit spread. You can take profits on your puts, right? You may want to move them up a full strike, but you can take profits on the put credits. And it's an entire campaign that we like to do, and it is very systematic, and we just do it over and over again. And it may be boring, but it gets results. And this is really this is one of the foundations that we teach beginners, and we do it over and over. This is our money machine right here.
Right. And what's important that you understand on those 1, 2, 3 punch, everybody, is that we really want you to enter the trade safe here, out of the money, right? When you have confirmation, we do what we call a cost reduction trade, which I'll go over more on Tuesday night, right? But this is critical, and we'll go over also with the people that join us into a key webinar of about an hour and a half on credit spread and really drilling the 1, 2, 3 punch in more details. But this is important. This is step 1, cross-recross credit spread, cross-recross retest higher low. We start easing into cost reduction trades, and we always need reference point, right? You cannot make those trades successful if you don't know I'm here and I'm going to the second reference point with over 70% chance of success, or at least 60% chance, right? Over a 50% crapshoot, right? You don't want to be a gambler. And this is what has helped us doing those strategies and adjust those strategies and tweak the strategy to capitalize on the last 2 days here on a small account. Okay.
One more thing, Mark, that I just thought of. On the 1, 2, 3 punch. Will you go back to that page?
Yes,
now,
sure.
Now we understand that everybody is on their journey, right? They're in a different place. Everybody's in a different place on this journey. Okay, it's a journey of discovery. Right? And so we understand that. And so if you people, some of you in the audience will have an aha moment That's what we want, okay? That's what we want. Every time we get together, for you guys to have an awakening, an aha moment. Oh, darn, I could do that. I could do that. Let's increase my probability. No more of this shooting from the hip. Let's change our behavior, right? Let's change our habits. If we're going right for buying a call every day, and that's just not working for you. Well, hey, guess what? Let's bring some different ideas to the table. And I'm not talking an infinite amount of ideas. I'm talking about a systematic, right, method of let's do this first, then let's do this, then let's do this. It's very systematic. So we understand that everybody's at a different place in the journey, okay? We're patient with each other, we're patient with you, right? And we want you to be patient with us. And in a low pressure environment, that's where we want you to learn this stuff, in a low pressure environment, okay? Because then once you know it, you have a muscular memory for it, right? Then you can take it to the real trading world. Then you can take it to your real-time trading.
Okay,
good.
One of the important things that you guys need to understand is that our entire trading processes revolve around two things: trend, reference points in which you construct your short strike for income on your credit spreads, iron condors or iron butterflies, or even choosing the right options and strikes to do your directionals or debit spreads or delta neutral play. The key of success is this, and Wayne Gretzky said that what made him one of the greatest hockey players of all time is he didn't go where the puck was at the time, but he was going to be where it was going to be. And that's the entire foundation of the trades that I've showed you guys that now I'm doing 10,400, keep on moving. The foundation of those trades is to look at the DTZ Full Pro tool, which we synthesize and simplify to you for the retail market, right? And say to yourself, right? And say to yourself, where is the puck? The puck on the 18 is here. What has the puck done? It went from an up pressure energy, cross, recross, blue dot, retest, to a sideways move around the most important DTZ, to a down arrow, ping that for 70% continuation of the move to the next reference point, which the next reference point, even if we have a rebound, is ultimately around the 1962.5. So we're going from reference point to reference point, and that's the Wayne Gretzky. Where is the puck? Where the puck is going? If you look at a weekly chart, if you are someone that is what I call a position trader, which I do also position some of my trade for more than a day, right? You look and compress the tools and you see that that puck for years, right? For years shows you the trend. See, up arrow here in 2011, blue dot every week, till guess what? May. Then lower high, and we sell off. So you see the reference point. Another way to help you see reference point of important support and resistance is look previous pattern. Look at this low. Look at this low. Look at this low. Look at this low in 2014. Look at this high. Look at this high. That's called a cluster. The high, low cluster right there, and just DTZ below it, is ultimately your next target. And ultimately, this 205 area now becomes a big resistance to the entire SPY. And this is very, very important. So we take all this information cumulatively between me and Kevin. I've traded 22 years now. Kevin about 12 or 14, right? We have 36 years of combined knowledge, and take all that knowledge to help you in the morning, manually help you understand how to get for the hottest money instruments. We call that the trade navigator for Apple, right? For Apple, Amazon, Netflix, crude, SPX, Google, YM, NQES and TLT. I don't have TLT, but there's TLT part of it. 11 instruments. The hottest 11 instruments that you'll ever need to be a consistent trader. If you cannot be consistent on Apple and on SPY, you have no business trading even Netflix or the Google or the other things. It's about trading the few. We are very focused, trading the few instruments that will consistently help you make money like us today, right? Like Monitor Tab, real account, $10,300. A triple here on this SPY from 4 to 11 almost. Amazon here going from 993 to 2687, right? These are trades that are mixed also with credit spreads. The credit spread at the top on Apple, 126, 127, solid for 27% ROI on a 1 point wide, and it's zero. It's completely crushed, right? Same on Amazon. Pre-earning, I had sold the 435, 430 for $1.16. It's crushed to nothing. So these are the type of things over time that you need to understand processes, how to do them, and be patient from one reference point to the next. What we do also is that we never leave you alone in our community. This is our day trading zones member areas. You get in the morning not only the buy zone, sell zone, caution zone, that auto plot for Thinkorswim, Ninja, and eSignal, but you also get the commentary here, and you get to come together with us every Tuesday between 11 noon to 1 p.m. If you cannot make it, do not worry. We record those sessions where we help you get some trades. So it's like you earn as you learn, and learn some of our processes live every Tuesday, right? And get those buy zone, caution zone, sell zones every day in your members area and in your charts, auto plotting at no extra cost. Here you Thinkorswim, it auto plots or Ninja or eSignal, right? And these are crucial because what they do is they give you a map for the day. They give you a map instead of being a gambler, okay? And this is critical. So the community, again, two things will happen here going forward if you're interested about the stuff that we go. Next Tuesday for everybody, we will have an event on how to achieve income consistency with the right underlying, and also defend, adjust, and size properly your position. Everybody in our communities is invited to go to this event. I believe Kevin from Real Traders Webinar can post a link where you can get also a free training series on our website, and being in our database, you'll have access to that. Second, we have been asked to offer a unique opportunity that is not being offered to everybody. So whether you join us or go at it all alone to become a successful trader, you got to have consistent processes like those McDonald's franchise that I showed you, right, Kevin, that you must trust to crush any psychological barrier. The deal that we are put together for the Day Trading Zones community is this. For 30 days, we are giving you the analysis where you have access to the buy zone, caution zones, and sell zones to the 11 most hot instruments in the market. It used to be 10, now it's 11 with TLT and the bonds. We give you the DTZ auto plotting tool, buy zone, sell zone, caution zone for eSignal, TradeStation, Ninja, and Thinkorswim. We give you access to our weekly video blueprint on Monday that tells you what is and what we expect for the entire week for those instruments. And we give you access to a live weekly chart blast between 11 a.m. to 12 noon with me or Kevin or both on opportunity that we take. You see some of the trades that we take, which allows you, because it's very important, this business is black and white. You trade or you don't trade. You trade real money or you don't trade real money. You show real results or you don't show real results. We showed you a yearly P&L experiment we did with Kevin. We showed you our best student P&L from Interactive Broker, Penny Creel, which is at 200% returns, and we are showing our trades for the past 2 days, right? And so if you are interested, this deal is unique. It's a one-time fee for all of this. Plus, we give you a bonus for the people in the room who are new to credit spread. So you will have access to a class we did on understanding credit spread basics, right? And all of this you will get, which we sell for about $497 of real value on our website. And we've decided today that you'll get the done analysis tools for the retail industry, the weekly analysis chart blast weavers, the DTZ auto plotting tools, right? And all of this, you will have access to this for a one-time fee of $47. And also the bonus of understanding the power of credit spread. All you have to do is go to the realtraderswebinar.com/DTZ, okay, /DTZ30. And I believe Kevin, the other Kevin that is in charge of Real Traders Webinars, has posted that link for you to be able to click in your control panel. And that link will allow you to get this special deal, a one-time $47 fee, no recurring, so that you give us a chance and an opportunity to change your trading career and help you. Because we are real traders, trade real money, and not only are we passionate about trading, but you will find out, making research and looking everywhere, that we are also very compassionate people. We understand traders. We are traders. We have been traders for over 36 years combined. You have a great day. Hopefully this was helpful to everybody and help you understanding a little bit of some concepts that we believe are important. And we will go deeper into the Tuesday event at 8 p.m. You have a great day and a great weekend. And thank you for everybody at Real Traders, to others. And sorry for the next speakers. We're 1 minute over.
Thanks for being here, guys. Yeah, we'll see you on Tuesday. Please try to be there, and we'll continue this conversation. Okay, be well, everybody.
Be well.